This is the Iron Trader TGIF. Today, as usual, we're going to take a look here at crude oil and natural gas. This video is for information purposes only, not a recommendation to buy, sell any stock, commodity, ETF. Please like and subscribe. Thanks for watching. All right, here we have the crude oil and we have natural gas. Now, ExxonMobil came out today and they beat the street there pretty good. And they're expecting here summer driving, the flying come around to really start draining out some of this oil here that's going on. So let's take a look here at the old charts. All right, let's look at the downside. The downside is we want to look at yesterday's candle, okay? So the low on that is basically 74.03. That's what you're trading against, all right? So if that is lost, then we want to do is we want to go right over here and we want to look at 73.77. We want to look here at 72.61, and then we want to look here at this 72.19. Okay, so these are basically your key support levels, and then if those are lost, then we can go with the rest of these candles, and then your big retest here is 64.36. Now, when you look at this chart here, you can see how it ran up, and then when it gapped up here, that was the OPEC cutting supply, which is going to start here on Monday. They're going to start cutting another 1 million barrels per day. All right, so we had the sideways action, ran up right into the 200 SMA. No surprise there. Okay, and it sold on down. Now, if you look at what it did here, okay, it sold down and then it rallied up. But what that is a bear flag. So are we seeing the exact same thing here again? When you get those bear flags, then you usually have a nice good drop. Okay, so is that going to be the same thing here? All right, on the upside, we want to look at these key levels here. So what we want to do is we want to look at this 50 SMA here, sitting at 76.08. This is a very, very key resistant level. Then we want to look at this 100 SMA sitting at 76.71 and your 8-day at 76.77. And then if it can get above that, then we have your 21 at 78.96 and then your 82.29, that's your 200 SMA, and then your big retest there is 83.53. But I keep telling you about this 8 days. See how this rolled and the price goes down? Now look how far this 8 SMA here is coming on down. So when you look at these charts here and you look at this bear flag, see where did it go? Right into that 8th day. So let's just see if this goes right here and then takes another shot lower here. We just got to see how it's all gonna shake out here. But I just don't like this when this rolls over. You have so much of these key levels of resistant areas. That's really never good. Really never good. All right, so let's just take a look here at natural gas. All right, natural gas, basically the same thing. Now, yesterday it popped up over to 50, but so far it can't hold that 50. So what you want to do on the upside is we want to look at this 50-day sitting at 2.334. Okay, that's the key. So in the price channel here is sitting at 2.413. You really need to close above. Then we go to these next levels right here. And then we go to the big boy right here, which is basically at 3.027. All right, on the downside, you want to look at this 8 SMA. This here is sitting at 2.56. And this one's sitting at 2.19. Those are your key support levels. If those are lost, then you are going to retest this 1.946. But right now, it's just a nice sideways action. We got to see if it's going to break up, break down, or if it's going to keep on going sideways here for a little while longer. It's just hard to believe that natural gas is going to stay in a 2 level here for that much longer here. Especially if you get a hot summer, all the power plants, that's what they use, for the power there for natural gas. So let's just be patient with it here. And if it breaks above and closes above that 50 SMA, then you got a good shot here to run right on up here, even like up to this 100 SMA here sitting at 3.02. Now I have more in-depth on crude and natural gas here after the pit close here at 2:30. All right, thanks for watching.